Hi, everyone. This is Matthew Cruz. I'm the Business Development Director here at Comstock Investments and wanted to give you a brief summary about what happened with the USDA June crop report today. So I'm going to pull up my screen here and I'll get to it. So this is the corn balance sheet. This was kind of a snooze today. As you can see, not much at all really happened. They kept the planted acres the same. Beginning stocks were pretty much the same. So the ending stocks coming all the way down were exactly the same. And so really the focus today in the markets was the weather. And so the crop report did not have much, if any, impact on the markets. Kind of the same story for next year in 2017-18. They kept everything pretty much the same. They kept the yield estimate for 170.7 bushels per acre. We still feel that that's fairly conservative. The Elwin Taylor, who's a meteorologist that we like to track, he has his estimate currently at 172 bushels per acre, and I know he's been pretty good about forecasting the yields, and so I guess it's too early to begin using a lower number yet, but time will tell. So with that big carryover extended over here, and leaving using these production and supply estimates, your ending stocks are only dropping down to 2.1 billion bushels for next year. So that's still quite a lot of corn going over into next year, assuming these numbers hold. This is a daily chart for new crop corn, and I wanted to give you a look at this because we've been kind of in a narrow trading pattern here for the last couple of months, kind of bouncing up and down between this 380 and 395 level. And we've said for the last couple of weeks that we weren't quite sure yet which way it was going to go, if it was going to go north or south on us. But to get ready, we figured whichever way it did go, we get a pretty good jump, and that did happen this week. That we kind of broke that barrier here at 395, and then yesterday we broke the key support. We had a key support, key resistance here at 404, and so we've just broken that, but not by much. And so we passed it, came back down yesterday, and today we've kind of been hovering around that, but we did close for the day at 406 on new crop. So we're just above that key resistance, which I think is pretty important. So this is again, December crop in a weekly chart, just to give you a little bit different perspective on what that looks like on the weekly chart. And so here we're now at this 406 price. We've gone above this 404 resistance. Looking ahead, I see some resistance here at 410. So I think that's still very much possible, but there's going to be a lot of resistance here at this 420 level. I think it's possible that we can still get up to that level if this drought and heat persists for another week or two. But beyond that, at this moment, I'm fairly skeptical. Things would have to start getting a lot worse very quickly for prices to get above that 420, because we're going to have a lot of resistance right there. Moving on to soybeans. So there's a little bit of change in the soybeans. Ending stocks were down overall for old crop. We're up to 450 million bushels. That was up 15 million bushels in the old crop, and all of that just came from the crush. That there's going to be 15 million bushels used in the crush, less bushels used in the crush, and so carrying that over on the next year, they're also estimating a little bit more of imports as well, and so that for new crop, that's going to increase it to 495 million bushels for new crop in next year. And so there's still a lot of downward pressure from fairly heavy stocks going forward. They're using a 48 bushel per acre yield for the USDA. Last year was 52.1, and so there's still a lot of time to go yet. It's going to depend on weather here, and so this number could certainly move up higher, which would continue to put more pressure onto the downside. So this is a daily chart for August soybeans. This is kind of what that looks like. Wanted to show you here with this trend line where we see some heavy resistance here going forward. Obviously, we came down to this 909 area. We've created some support there, and we've been moving on up here the last week based off of dry weather. But we kind of see this topping out here at this 950, 952 area. That's kind of the way I see it. Things would have to really digress rather quickly for things to move on beyond that. But we'll see what happens. But I think soybeans for the time being are going to have a hard time kind of punching out beyond that 952 area. And so this may be a good place to look to sell on this rally, depending on how the weather goes. Moving forward here, this is the wheat. So that not much change to the wheat here. There was 2 million more bushels in imports. So that just increased our bottom line ending stocks from 1.159 million to 1.161 million. 1.1 billion bushels to 1.16 billion bushels. So that there's still a lot of wheat there. Now next year they're expecting that to drop quite a bit. A lot of that's they're expected to drop from 914 million roughly. The latest June has it at 924 million bushels. However, while there's been some weather-related issues with the wheat production, global wheat production is expected to offset a lot of that production here in the United States. And so unfortunately we still don't see a lot of upside to the wheat market the way it stands now. This is a weekly chart for July wheat. You can kind of see what's happening here with we've created a key level here of support, that this 419 area. Again, this is in July wheat, and we've kind of shot up here to this 451 area. And so I think as time goes on, we're going to kind of be stuck between these two areas, but we'll see what happens. But with the better global wheat production, that unfortunately is going to keep prices depressed here in the United States. And so I would look for wheat, if it's able to pass this key line of resistance, that may be a buying opportunity. So this is really probably the most important chart. It kind of shows the global demand. We can't just focus on the United States. We have to focus on what other countries are doing. And Brazil obviously is having a very good year, and their soybean crop continues to get bigger. Last month, their soybean crop was estimated at 111 million metric tons. The USDA increased that to 114 million metric tons. So in the last month, they found another 3 million metric tons of beans. And a lot of that's just because they kind of expected that their bean crop at the end was going to kind of tail off, and that didn't happen. The yields held up until the very end. And so that's been a surprise, a little bit of a surprise there. So world ending soybean stocks for old crop is set to increase then from 90.1 to 93.2 million metric tons. Now that's a huge jump up from last year, which was at 77.1 million metric tons. For next year, that's expected to drop slightly down to 92.2 million metric tons. So there's not too much change there from one year to the next. Moving on to corn. Corn is kind of the biggest surprise. What's had the biggest swing in Brazil. That last year they had a pretty rough crop of 67 million metric tons, and that's increased to 97 million metric tons. And some of the local Brazilian agencies, CONAB, for example, is using even numbers bigger than that. And so USDA is actually fairly conservative, potentially conservative on this number. We'll see. But so world ending stocks in corn last year was at 223. Excuse me, last month was at 223.9, and that's increased to 224.6. So that's up from last year's number of 211.8 million metric tons. But we do expect that consumption will increase, and we see that USDA is expecting that number for corn to drop for next crop at 194 million metric tons. So slightly less than last month's estimate of 195 million metric tons. Moving on to cotton. I don't know if a lot of people track cotton, but I used to raise cotton in Brazil, and so I like to track cotton prices. And this is the new crop, December cotton. And cotton is actually, they're increasing acreage here in the U.S. From 10 million to 12 million acres. Exports have been very strong. Demand has been very strong. However, that's helped offset that. However, the other major cotton producing countries are responding in like, and so places like China and Brazil and Pakistan are increasing their production as well. And so that's continuing to put a lot of downward pressure on cotton. And so you kind of see here last year we shot up to this 77-cent area. And now we're kind of in a wedge here. Been going back and forth. And so I've kind of been trading this back and forth area. But now I put a sell order here at 72.14. This is a pretty strong floor here that cotton has developed in new crop cotton. And so I've put a sell order right below that, looking for it in case it breaks that boundary. And of course, we never know it if it were to push further north. Resistance here is at this. Right now is about this 73.20 area, and so that's what's going on right now. It's just been below this is the 20-day moving average, and so it's below that, which would generally give you a sell signal. So that's what's going on right now with cotton. This is sugar, and I don't know if people follow sugar too much, but this is kind of a spec trade that I've been following. And going back to earlier in the year, you had sugar in this kind of creating a trading range here between this 19 and 20 level area that was there for about 6 weeks. And then it subsequently broke that support area and continued to drop. And so I've been following the price as it's been coming down. And it's a couple of weeks ago, it created about a 6-week consolidation period here. Where prices jumped back up a little bit, then it continued to fall, and now we find ourselves. This is in October sugar. We find ourselves here at this 1447 area today, and again, it looks to me like we're creating another minor bear pause here of consolidation, not too unsimilar to what unfolded here. And so I'm looking to for another sell signal around this 15 area. If it gets up to 15 again, I would probably look at the sell, as there's still ultimately the trend, as you can see, is down. There's still a lot of sugar stocks. Brazil is again the largest sugar producer in the world. India is number 2, and so there's they're continuing to have a good sugar crop there, and so the trend is the way I see it is continuing to be down. So that's all I have for you today. I thank you for listening in, and hope you learned something, and we'll catch you again next month. Thank you.